Hi, welcome back to part two of my two-part interview with senior U.S. tax manager Robert Clegg. And he works for an accounting firm that deals strictly with cross-border taxation. And it's great for Canadian investors looking to invest in the United States. So we'll continue on with that interview. And if you missed the first part, you can just check through my blog for part one that I posted last week, and you can get all caught up. All right, so I have a question I got recently, or a concern, and that is about how quote-unquote horrendous the estate taxes are in the United States, and how it doesn't make it worth investing in the States because of that. Can you clarify a little bit or talk about estate taxes?
Well, estate taxes, as of late, well, for 2014, the exemption amount, which means the fair market value of a person's worldwide estate, is $5.5 million, right around $5.5 million, which means for estates that are 5.5 million or less, there will be no estate tax consideration. Now that's federally. A number of states have their own acts which have a lower threshold, so we have to keep that in mind. Washington State, for example, I believe it's at 1.2 million. So it's a lot less. So if you have Washington State property in excess of 1.2, you could very well be subject to Washington State estate tax. But on a federal perspective, estates under 5.5 million are not subject to because of the credit that's available that offsets any amount payable. For estates that are in excess of 5.5 million, they could be subject to U.S. estate, at least the property. And how it works is if you're a U.S. person, you're a deemed domiciliary of the United States, regardless of where you live. If you're a Canadian resident, Canadian citizen, Canadian resident, you are only subject to estate tax based on the amount of U.S. property subject to estate tax that you own at the time of death. Real estate being one, stocks, bonds, maybe a boat, cars, so on and so forth, capital, trading accounts, to name a few. So it all depends on the value of your U.S. property and also the value of your worldwide estate, right? So if your worldwide estate is over a certain dollar amount, then you could be subject to U.S. estate tax. As you can tell, it's a complicated field. I could go on for hours, but that's basically it's a high-level overview of the fundamental principles of U.S. estate tax. Again, if people have questions or they have concerns, they think they may be subject to estate tax, it's always advisable to get a professional opinion on it and what you can do about it, right?
Okay, so what I'm gathering is it's a personal situation thing, so people should sit down with someone like yourself and hash out whether that applies to them and if it's something they need to be concerned about or have certain things they need to do to address this.
Absolutely,
Yeah.
Absolutely. It's one thing to speculate, but it's another thing to really dig in and analyze what the ramifications are. And that takes time. It takes time, it takes effort, and unfortunately, it takes money too.
Yeah.
But if it's done properly, then you'll know in advance what the ramifications are, and then you can start taking steps to help alleviate or even eliminate the potential of U.S. estate tax payable upon death. So.
Okay. I guess I'll close it there. I just wanted to ask one more question, and that is there any extra advice maybe that we haven't covered that you can give to Canadian investors who are wanting to invest in the United States on a tax perspective?
Well, the first thing is, I mean, there's very little to fear. I have clients, they think that, every time they cross the border, they're going to get stopped. Well, let's put it this way. They likely won't be stopped because they're investing in real estate. It's not to say that something else is out there that they might be stopped because of.
Yeah.
But just because because they've invested in real estate, that's they're fine, right? Canadians, the U.S. real estate market's open to anyone, right? But if you do, make sure you understand even before you get into purchasing what exactly you're getting into. I have clients that set up, just complicated structures when in our firm, in my firm's opinion, they're just not needed. It's easier to get in, and it's a lot harder to get those things unwound, right? So seek professional advice before you go in. Maybe you need a more elaborate structure that involves a corporation, a Canadian company, a U.S. company, partnerships, to name a few, right? Maybe you don't, but know what you're getting into, right? Also know where you're investing, right? Arizona, they have a personal income tax. Texas, Florida, do not. Washington, do not. What I mean by that is if you purchase in Arizona, you're going to have to file a federal and also a state tax return. If you structure the acquisition through, say, a limited partnership or a triple LP, you're going to have to do a federal partnership return. You're going to have to do a state partnership return. You're also going to have to do a federal and also a state individual income tax return, and also your Canadian tax returns, right?
Yeah.
So know what you're getting. Keep it simple, keep it basic, and you'll be a lot happier, right?
All right. Well, I'd like to sit down all my investing partners and clients with you guys. So I'm just wondering, what's the best way to get in touch with you? I know you're operating in BC and Alberta, but if you're anywhere in Canada, can we work with you, like over
Absolutely.
Skype or whatever?
We can do it through Skype. We can teleconference through landline, Skype, FaceTime, through Apple, a whole means of different communication. Our clients contact us just by phone, email, but mostly, it's always nice to connect face to a name. Absolutely. So oftentimes we'll Skype, FaceTime as well.
Okay, well, I'll include that info in the YouTube comments below the video, so that they can contact you.
For sure. And so it's, it's a pretty straightforward. We're always transparent with our clients. So before we do any sort of consulting work, we'll spell it out with absolute specifics, what we're going to do, the estimated time, and also how much it's going to cost.
Great. Well, Robert, I really appreciate you coming on here and being my first Google Hangouts test here. So that's great. And maybe we can do this again and answer some more questions as we go along.
Oh, I'd be absolutely happy to. Thanks again, Cal, for inviting me on.
All right, Robert. Well, thanks, and have a great rest of your day.
Okay, you too. Thanks very much.
Great. Well, thank you so much, Robert, for giving us your time today and answering some of these questions that I have had, and I know a lot of viewers here have had when it comes to cross-border taxation issues as a Canadian investor. If you'd like to learn more or talk to Robert directly, I am going to post his information below in my blog, so you can get in touch with him. And if you're curious about learning more about U.S. investing in general, there is a blue and red sign-up box to the side of this window, and you can put your name and email address in there. And I'm going to send you my free report, which is called How Canadians Are Making Huge Profits Investing in U.S. Real Estate with Very Little Money Invested. It's a long title, but I'm telling you it's real. I've been investing with this strategy for quite a while now and making big returns along with my investment partners, and I'd like to share it with you. So check that out, and I hope you'll come in and watch next week for my next installment of my video blog. And again, thank you so much for tuning in.